Hey, good afternoon, everybody. A little midday update here for you. Really interesting session. A lot of buzz last night, this weekend, about the Spanish banks bailout, causing the futures to give us this large pre-market gap. Last night, Sunday night, I checked, we're up about 14, 15 handles in the S&Ps. Fast forward to this morning, by the time we opened, market was up maybe 5, 6, 7 handles. So we had come off substantially from that overnight or this weekend news story. And then fast forward to now, it's now lunchtime Monday morning, and the futures are down 7 handles. So quite a big reversal from what was something quite bullish Sunday night to, by the time we get to lunch Monday morning, we are now negative, and really not a buyer in sight here in the market. We'll take a look at that in a second. So, it is important that you are, tuning into the VTF as these gap up trades, as bullish as they might present themselves, actually when they start to trade become more bearish events than anything else. And that's really what we've seen a lot of over the last, 10, 12 trading days. Lots of, gap ups that sell off and gap downs that rally. So it's not necessarily as it looks on paper. It's actually quite the opposite. So let's take a look here at the S&Ps. Here's our spiders chart. This is our daily. And you can see these swing highs, our 142 high in the SPYs down to around 127 5 days ago. And we have actually completed a corrective wave. Corrections usually happen in A, B, C structures, A, B, C. So the C happened actually this morning. We gapped up above what was the A pivot high right here and starting to tail down. So the market, now can potentially, begin to trade lower. We still could see more upside here. I think, again, time will really be the factor here. Also, 50% retrace this morning, 50% of our entire, up to down, we recovered in about, 5 or 6 trading sessions. So most of the upside coming on a gap up this morning. So more intraday, we opened up against spiders. We opened up, gapped up, have done nothing but really sell off since the open. Now starting as we go into lunch, really just to consolidate here on the lower end of the range. So I think, sellers are going to watch this to see if we can't really, start to turn back up through lunch. We could see another down move, into tomorrow and possibly into Tuesday. Moving around the horn, Apple. A lot of traders that were watching this 580 level. What was resistance, we gapped above it this morning. But really no trade here. If we go to a smaller time frame, here's a 10-minute. You can see we opened around 588. We're trading around 587 right now. So it's been, pretty much a non-event there. I think the market waiting on the 1 o'clock developers conference happening there in Apple today. So we could see some news out of that stock that could break this stock loose. My one, caution, I've talked about it before. For those that are familiar with the active trader program, flat 21 EMA here. Again, this is our moving average, and I'll make it real big. Just this 21 EMA, this red line, which is really what I look to for intermediate term trend. Relatively flat, has been flat for some time, and trendless stocks like this, as much as they look bullish right now, can easily fail. So we're on alert here, at least I'm on alert here for how this news could impact the stock. And on a smaller time frame, we just put in this high here at 580, about 588 and a half, retested it. So we're going to watch to see how this level becomes more significant, or if we can rally right through it with volume. Again, the key will be volume. Volume is the driver. We want to see volume come in and direction to follow that volume. So without that volume, it's sort of a listless, non-committed trade, and I would be very, very careful about putting on trades until we see that volume commit. A couple other things to look at today. Banks. Let's take a look at some of the banks. We'll start with Goldman. Not much of a rally here in Goldman. Again, gapping up, selling off. There's just no buyers in the banks. Really, we'll start with Goldman. We'll look at JP Morgan. Gapping up into a declining 21 EMA here, selling off. There's just no buyers to be found here in this market. So as much as we've seen a nice move off the lows in the S&Ps, there are still some really underlying weak sectors and weak stocks here. There are a handful of strong ones, and we can take a look at those, but some really, kinks in the armor here that we need to pay attention to, because without them, it's going to be hard for the market to sustain any long-term push here. So banks, to me, not a place where money flow is. Moving on beyond banks, we're going to look at real estate. We're going to start with the IYR. I talked about the IYR in some morning call about a week or two ago. A little bit of a bounce in the IYR in real estate off the lows here, but again, like the market fading, very much like the market fading off today's gap up. So I've been looking at some real estate stocks to nibble on some, some shorts in this area, as I like to, get involved on the short side on a bounce, which is exactly what I'm doing here. We look at IRR. We can also look at some REITs, SPG on the radar for lower prices. Vornado, VNO, big, you can see that big stick down today. So definitely some sellers, LRY, Liberty, just a handful of REITs that are on my radar. And as far as specific trades go, I'm also keeping an eye on Whole Foods. Whole Foods more bullish than anything else. Opening up at prior 52-week highs, you can see this 91.50 area. So we opened up in here and starting to fail. Keeping an eye on if this becomes just a pullback into a rising average or more of a double top type of structure. And we'll know that with more time. Intraday, Whole Foods, I am short for disclosure purposes. I am looking to see if we can sort of break this 90 level with some volume later today. This is a 13-minute chart. So a couple of trades that I'm keeping my eye on: real estate, banks. Obviously, you have the news out of Apple. The market just not showing a positive reaction. What was positive last night, like I said, quickly becoming a much more bearish actual trade. So we need to, you need to sort of look at the pieces of the puzzle here and evaluate, what's the path of least resistance? What side of the trade do I need to be on? And is this the right opportunity for me? Again, the smart trader is always about evaluating risk, not necessarily what's going to happen, 5 days from now. But by waiting for structure and good setups and committed, volume, you're going to find opportunity. And until that happens, it's a day trading tape. It's a great time to be on the VTF. It's a great time to look for some, opening fades, whether it's buying gap downs or selling gap ups. It's a great time to be a day trader. Be quick, be flexible, be objective. And I think cash is king right now until the market really tells us something more concrete, and that'll take, like I said, that'll take some time. So depending where you are and what you're looking at, again, it's just being flexible, little money rotation here, looking at real estate today, not something I, look at all that often, but, sort of moving with the ebbs and the flows of the market and, staying nimble in terms of my expectations. Really, for me, it's going to stay a day trading tape until something dramatically changes or I start to see volume drive us higher or lower, and I haven't seen that yet. So less is more, and I'll talk to you later.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.